Good morning, everyone. Hello, what's up, and welcome back to my YouTube channel. It has been a while, and I really apologize for not posting videos on my YouTube channel for almost 2 months now because I was really busy with my community, with my Smart Premium community. So I couldn't make videos, I couldn't post the videos on my YouTube channel. Okay, but now I got a little bit time, so I've restarted to make videos. And this is the first video of a series of videos that I'll be posting on my YouTube channel. I'll be taking you from structure mapping to entry modules. Okay, so this first video will be only about structure mapping, and we're gonna break this topic into 3 points. Okay, the first thing we're gonna talk about is what time frame should you use for a proper structure mapping, and the second point is where to start, and the third and last point would be how to identify your area of interests. Okay, so without any further doing, let's get started. Okay, so here we have a diagram here, and I'll be explaining you how to make a structure mapping on this diagram, and later on we'll switch to a real chart for real examples. Okay, so the first one is what time frame should you use, and this is actually the question I get asked the most when SMC traders want to start the structure mapping. Then they are worrying more about what time frame should they use, or when I post a setup on Instagram or something, they ask me what time frame is that. In reality, the time frame doesn't absolutely matter here when you want to start your trading, your structure mapping. Okay, your time frame depends only on one thing: your trading style. Okay, if you're a day trader, for example, then you have to choose a time frame in such way that suits the best your trading style. Okay, me personally, as a day trader, I'm not going to use H4 as my main time frame. Why? Because I'm a day trader. I open my trades in the morning and close them most of the time in the afternoon. Okay, so I need a time frame that gives me many structures like this one here. I got many break of structure in within one day. I got many order blocks, many confirmations. Then it gives me multiple opportunities before the day ends. Okay, but if I was using H4, for example, I would not have much opportunities. Why? Because in a given day, we have only 24 hours. And when you're using H4, for example, you get only 6 candles. 6 candles are not enough for you to have a proper structure, to have a proper confirmation for your entries. Okay, so H4 is for maybe swing traders or positional traders. Okay, but as a day trader, you have to choose a time frame that suits your trading style. And one other thing that proves that the time frame doesn't absolutely matter here is that, let me show you this picture here. And can you tell me what time frame is this? Okay. Okay, take a look at this picture, and can you guys tell me what time frame is this? If you are shown this kind of chart like this, it is absolutely impossible for you to know what time frame is this. Why? Because every time frame has their own reality, but they work absolutely the same. Okay, here, no matter what time frame is this, you will still use the same principle of SMC to make your structure mapping. Okay, this time frame has its own inducement here, on order block maybe, and on break of structure, their own change of character, and their own everything, on order flow, and on everything. Okay, so no matter the time frame, uh, the SMC work absolutely the same in any time frame. Okay, that's why I always say time frame doesn't matter. It only depends on your trading style. Okay, so if you take a look at this picture here, everything works properly in SMC. Okay, so this is another reason why I can say time frame doesn't really matter when you want to start with your structure mapping. Okay, so with this question already answered, we're gonna move to the next point, which is where to start. Okay, and this one here is the most important part here, because if you don't start your structure mapping properly, or where you should start it, then the rest of your structure mapping will possibly be wrong or completely misleading. Okay, as a beginning, when I was a beginner in SMC, I used to open my chart and start my structure mapping randomly in the middle of nowhere like this. I say maybe this one here is an inducement, and then identify a break of structure, and then I wait for the market to take the next inducement and expect the price to maybe mitigate my order block and then take a buy. But this is a great mistake. Okay, when you want to make a proper structure mapping, First of all, you have to identify visually the trend of the market. Okay, in this diagram here, we are in a bullish trend. Okay, so the first thing you need to do is to identify the very beginning of that trend. Okay, that means you have to identify the latest change of character, because that change of character is the beginning of the new trend. Okay, if the market was bearish behind here, then the change of character will mark the beginning of this bullish trend. Okay, so if you visually identify your trend, even if this trend was bullish, okay, bearish, I mean, then you have to go back in time and look for the latest change of character, which is the beginning of that bearish trend. Okay, so which is where you should start your structural mapping. If you start in the middle of nowhere like this, most of the time you will get confused later or get wrong setup. Okay, you may get wrong order blocks, you may sell where you should be buying, and so on. Okay, so it is very important to come back in, to go back in the time and identify your last change of character here. Okay, so after you identify your change of character, then it will be easy for you to catch up with the trend. Okay, you have to just identify your inducement and then your next break of structure until you make your structural mapping till the till where the price is currently. Okay, so this will be our break of structure like this, another break of structure here, again a break of structure here, and this one is not yet a valid break of structure because the market didn't take out any inducement yet. Okay, so this one here is like is our proper structural mapping here, but this is just a diagram too for explanation. Don't worry, I'll switch to a real chart so that I can give you real examples. Okay, so after you identify your break of structures and inducement, then comes your area of interest. Okay, this is where you should be placing your trade or expect the price to make reactions on. Okay, so these areas are, first of all, your order blocks. Okay, this one here is, for example, my inducement. Okay, after the price has broken this last structure here, the market come down and take out this inducement. Then the first order block here is a valid order block. Okay, so this one is my first area of interest, and the second area of interest is here. This one is my extreme order block. Okay, extreme order block, and here we have our decisional order block. Let me change the color. Okay, so these are my two area of interest. There are other area of interest like order flows. These are very important as well, because an order block is just the refinement of an order flow. So you also have to identify your order flow. Okay, and the order flow is the last selling move before the buy. In this case, we are in a bullish move. Okay, so an order flow would be the last selling move before a buy. So this one is your order flow and the refinement of an order flow. So you see that this order flow area here is really large here, so you don't know exactly where the market will react on. If you place your trade here, then your stop loss will be all the way down here, and you will end up with a really big stop loss size here. Okay, so that's why you usually make a refinement of an order flow into an order block. Okay, so we are very used to an order block, and sometimes we even forget about the order flow. Okay, so this is my third area of interest. There are also single candle order blocks, which can be your area of interest. Okay, your single candle order block, and they are IFCs, the candles that take out an important liquidity. Okay, candles like this. Okay, this one like this, and this candle take out maybe a session liquidity or previous day low around here. Okay, let's say this one here was the previous American session and the market dropped to take it out like this. Then this one here is your IFC, and when the market will come back to mitigate this IFC, then this will be a nice opportunity for buy. Okay, because this is a valid area of interest and the market will probably react on it. So there are many areas of interest that you should identify, and then all you can do next is to wait patiently for the market to come to those levels before you can take your trade. Don't rush, don't chase setups in the market, but wait patiently for the market to come and mitigate your valid areas before you can take your entry. Okay, so this is it. So the first thing, let me do a quick recap in this diagram before we can move to a real chart. So the first thing you need to identify is what time frame should you use. Okay, depending on your trading style. Okay, once you identify your time frame, then you make your structure mapping starting from always the beginning of any trend. Okay, if you're in a bullish trend, then go back in time and look for the last change of character. If you're in a bearish trend, you also have to do the same way. Okay, and after you identify your last change of character, then it will be easy for you to identify the inducement and the next break of structure until where the market is currently. And then you have to mark your area of interests, which are the zonal order block, extreme order block, your order flows, your single candle order block, your IFC, and the session sweep, and everything. Okay, so these are your area of interest where the market will possibly make a reaction, and then just wait for the market to come and mitigate any of those area. Then you can take your buy or your entry. Okay, so this is it for this example. So now let's move to a real chart so that I can give you real examples. So here we are in this real example, in this real chart here. Okay, so we see here, this is Euro USD in M15. Okay, so this is the trend. Okay, we are in M15. This is my main time frame, the time frame I use the most. Okay, and you can visually say that the market is bullish here because it has broken structure here. It has again broken structure here. Then the market is possibly in a bullish trend here. But how to make sure that the market is actually in a bullish trend? Okay, you have to go back in time and identify the last change of character. Okay, so we will just mark this one here as a break of structure, but this is not yet our valid break, our valid structure mapping. Why? Because we are looking for the last change of character. Okay, so we will just mark it like this and go back in time to look for our change of character. Okay, so this one is our inducement, so that makes this break of structure a valid one. Okay, this one here also is our last break of structure here. This is a break of structure because the market has taken inducement here before pushing higher. This is an inducement. Okay, like this. Okay, so now we are almost in the beginning of this bullish trend here. But how to make sure this is the beginning of this bullish trend? We have to identify the latest change of character. Okay, if the market has broken structure here, then our change of character would be something around somewhere around here. Okay, and we see here there is no valid change of character here. There's no valid change of character, so you have to go back in time and keep looking for the latest change of character. And we see here that the market has taken out inducement. This one here is the swipe of inducement. Okay, and when the market push downside to break this level here, then this is our valid break of structure. This is our latest break of structure. Okay, and then the market has pushed higher but failed to break and close above it. So our last lower high here would be transferred from this one, from this one here to this new one. Okay, so next time the market need to push higher, break and close above this new higher high, higher lower high here to be a valid change of character. Okay, and as the market hasn't taken out any inducement here, then when the market has broken this level here, this one is not a valid break of structure. Okay, so here we are. This one here is our latest change of character because the market has pushed higher in the other side here to completely break it. So this one here is our break of structure. Sorry, our change of character, I mean. Okay, so this one here is our change of character. So this structure here is just an internal structure. Okay, all right, so here we are. So after this break of structure here, the market has pushed downside here, and then this one here will be an inducement. Okay, the first valid pullback that the market has cleared after the latest break of structure here. There was no valid inducement here. The market didn't take out any valid inducement until here. The market pushed higher and take out inducement. There is also a minor inducement here, but I always choose a bigger inducement. Okay, so this one here is our inducement. The market pushed higher, and where is our decisional order block? Here. Okay, this is our decisional order block. So at this moment here, we are still in a bearish. We are still in a bearish trend. Or where is my decisional order block? Okay. Well, still in a bearish trend, so we should be looking for sell opportunities only. Okay, let me use bar replay so that you can see it clearly. Okay, so after the market has broken, or no, around here, maybe here. Okay, so here At this moment here, we're still in a bearish structure. Okay, why? Because the market has not yet um, broken and closed above this last lower high here. Okay, so we should be looking for sell opportunities. So this one is our decisional order block, but the market failed to hold it, and then we have to wait for the market to mitigate our extreme order block here, and then we should be looking for sell opportunities around here. Okay, and this one here is our smart money trap. Okay, this is just a trap. And you see that the market has given a small reaction here to trap more sellers before pushing higher, okay, to mitigate our extreme order block here. And later on, we see that the market has completely broken and closed above our latest lower high here. So this is a valid change of character here. Okay, so from this time on, we have now to look for buy opportunities because the market has shifted from bearish to bullish structure now. Okay, so market has taken out this inducement here, and we have to identify our latest our decisional order block. Okay, so this one here is our decisional order block, and our extreme order block will be all the way down here. Okay, this one here is our extreme order block. So if the market push downside here and mitigate this decisional order block, give us confirmation, then we can take a sell. Or if this decisional order block fell, then we have to wait for the market to mitigate our extreme order block, then we can definitely take it back here as well. Okay, so let's move on and see what will the market do. Okay, we see that the market is pushing higher here. The market came down but didn't actually mitigate our decisional order block. But you see that the market has mitigated our order flow here. Okay, that's why I told you order flow is very important. You also have to identify your order flow. Sometimes you see the market react uh, in the middle of nowhere. You don't know why the market react. But if you look on the left here, you see that this one here was our last selling move before this buy. So this one here is our order flow, and the market has reacted on this order flow. And this order flow here is the refinement of this order flow. Okay, so the main thing here, the most important thing here is your order flow, not your order block. Order block is just the refinement of an order flow. Okay, and if you see that the market mitigate your order flow and give you a confirmation lower time frame, then you can definitely take a buy. But if the market don't give you confirmation, then you can maybe wait for the market to mitigate your order block, which is the refinement of your order flow. Okay, and the market push higher, break the structure, and then we are now in the proper trend. Okay, so this structure is valid. Why? Because we have started from the last change of character, and then we are here. Okay, so let's wait and see if the market will give us any structure, interesting structure later on. Okay, you see that the market has taken out this inducement here. Maybe this one here is our decisional order block. This is our decisional order block. And once again, the market seems to react on this order flow here. Our last selling momentum before the buy, the market has exactly reacted on this order flow here and give us a small reaction here. Okay, so that's why order flow is always very important here, but most of SMC traders sometimes forget about order flow. Okay, so let's wait and see what will the market do. All right, I jumped forward in time, okay, to have a proper structure because around here the market was just consolidating here. And you see that this move here was caused by probably a high impact news, maybe the last NFP. We are on Friday, so it was caused by the last NFP. And you see that the market has failed to keep his bullish trend, and the market has completely changed character. Okay, so this one here is our latest change of character, which is here. The market has broken and closed below it. So this one here is our change of character. Then the structure has shifted from bullish to bearish now. Okay, so we have to start looking for sell opportunities. And here you see that this move here was caused by high impact news, and we notice that the market is really struggling to push higher to take out any inducement here because the bearish momentum is really high over here. Okay, until here the market has taken out this inducement. So this one here is the first inducement that the market has taken after this high impact news. And if you take a closer look here, this one here was a consolidation. Okay, The market has given us like a consolidation here. And if you notice, the market has cleared this liquidity before dropping, okay, creating an IFC. So this one here is our institutional founding candle, which is our area of interest. Okay, so after swiping this liquidity, the next candle has closed below it. Okay, so this can also be called your single candle order block, and you can definitely take a sell on it if the market comes back to mitigate it. And I actually caught this trade in my challenge account. Okay, when the market came back to mitigate this institutional funding candle, then I took this sell here. Okay, and my target was around here. Okay, and this is the trade that I've got. And here we have another break of structure. Okay, so this is how you can make your proper structural mapping. Okay, so let me make a quick recap. First of all, you have to identify your time frame based on your trading style. Okay, for me is M15. Okay, after that you have to identify visually the trend of the market if you are in a bearish or a bullish trend. Okay, you see here that in our case here, the market keeps making higher highs and higher lows. So we are probably in a bullish trend. So this is just a scenario. And next, we have to verify if this bullish trend is valid by identifying the latest change of character. And we have gone back in time to identify our latest change of character. Then this trend here is a valid one here. And then after that, you have just to mark your inducement, your break of structures, and then mark your area of interests, which are order flow, order blocks, uh, your single kind of order blocks, your IFCs, and so on. Okay. So after that, you just have to wait for the market to come to mitigate any of your area of interest, and then you can switch to a lower time frame and take your entry. Okay. And here I have taken this sell here based on my IFC, which is also my single candle order block. So this one here is my area of interest. I patiently waited for the market to take out this liquidity, close below the next candle, has also closed below this previous candle. Then when the market pushed higher to mitigate this single candle order block, then I definitely took a sell. Okay, so never chase setup in your trading. Okay, just wait for the market to come and mitigate your valid areas. So this is it. This is the end of this video. I hope it's really helped you to change your vision of your structure mapping. The next video will probably be about your area of interest is how can you identify a valid POI, a high probability POI, and so on. And the last video will probably be about your entry modules. Okay, what entry module should you use and in which conditions can you use? Okay, so thank you for watching. Don't forget to subscribe and stay tuned. See you next time.